Initial conditions in the market, the seeds that shape the trading day. One of the most important insights in advanced market analysis is that a trading day does not begin at the market open. Instead, it emerges from the state in which the market ended the previous day. This is a fundamental principle in every chaotic system. A small difference in initial conditions can dramatically alter how the system evolves. In trading, these initial conditions appear as four primary seeds. 1. The volume structure into yesterday's close. 2. The price structure in the pre-market. 3. The character of the first candle of the day. 4. The micro-oscillation frequency right before the open. Each of these is an energetic seed that influences how the market behaves during the first part of the session and often throughout the entire trading day. Let's break down each seed, how to interpret it, and which time frame you should use to analyze it. 1. Closing volume, how the market goes to sleep. What matters is not the total daily volume, but the volume in the final segment before the close, typically the last 30 to 60 minutes. This volume represents the energetic state the market carries into the next day. When the volume is high and the movement is clear, the market ends the day with active momentum in one direction. This indicates an incomplete move and a higher probability of continuation in the morning. When the volume is low and the market is drifting sideways, it enters the night in a state of contraction. This usually leads to a calmer open or a narrow early range until a breakout sets the direction. Recommended time frames to analyze closing volume: 15-minute, 30-minute, 5-minute, and occasionally the 1-hour chart for broader context. 2. The pre-market, a thin but important microstructure. Pre-market trading is a thin version of the market. Lower volume, reduced liquidity, and limited participation. Because of this, the structure created in the pre-market forms the base layer on which the regular session will build. A quiet and stable pre-market with a tight range indicates contraction. The day will usually start inside this range until a breakout defines direction. A pre-market that trends or pushes in one direction shows an initial bias that may continue after the bell. A pre-market full of whipsaws and rapid flips signals imbalance. And the open is likely to be volatile because no clear structure has been established. Recommended time frames for pre-market analysis: 1-minute, 5-minute, and 15-minute charts. 3. The first candle, the day's declaration of intent. The first candle acts as a public announcement of the day's early interaction between buyers and sellers. A large body with almost no wick means clear directional intent. The market enters the day with active momentum or a desire to continue yesterday's move. A medium body with a significant wick on one side indicates early resistance. Even if the direction is clear, opposing pressure is present, and the day may begin with a range before a breakout. A small body with wicks on both sides signals indecision. The system is still in contraction mode, and the day's direction will only be determined after the first breakout. Recommended time frames for the first candle: 1-minute and 5-minute charts. 4. Micro-oscillation frequency before the open. In the minutes leading into the open, price often moves in very small pulses. The frequency of these pulses carries energetic meaning. A tight, fast oscillation indicates strong contraction. This type of energy usually leads to a sharp initial move once the market opens. A wider, irregular oscillation indicates dispersed energy, often leading to a slower or more confusing open. A single sudden spike inside a quiet range is sometimes an early signal of the direction the market may break toward after the bell. Recommended time frames for micro-oscillation analysis: 1-minute and 30-second charts. Conclusion: the market never starts from zero, it continues its story. Unlike the approach that views each trading day as an isolated event, advanced technical analysis treats the market as a dynamic system where every move grows out of the previous state. Closing volume, the pre-market structure, the first candle, and micro-oscillation frequency are the seeds that shape the movement, tone, and direction of the day. A trader who identifies these seeds gains a powerful advantage. They understand the context of the day before the first trade even happens.